Most traders think what they need is more confidence, but really what they need is certainty. I ask many traders, are you confident in your trading strategy? And usually they say something along the lines of, yeah, I'm confident in it. And then I ask him and I probe a little deeper and I say, how did you come to the conclusion that you're confident in your trading strategy? And usually what they say is, I've seen my mentor make a little bit of money with his trading strategy. I made $2,000 last Tuesday and I think it works. And then I ask them, how do you feel after you take a loss? And they say, all that confidence I had disappears. There's something wrong with me. And I say, whoa, hold on. There's nothing wrong with you. You're just trying to convince yourself that you're confident in something that you don't have data to support that actually works, and you've put yourself between a rock and a hard place because you want to believe this trading strategy works, but you haven't collected the data to show your brain with true evidence that it's profitable and it works. So you're trying to convince yourself you're profitable, but every time you take a loss, you deep down are questioning whether that strategy is profitable or not. And they usually say, yeah, that's true. So I tell them what you need isn't confidence. What you need is certainty in your mind that every time you come to the market, you know exactly how you're entering into the market and you have data to show that over a large sample space, you entering that way is going to be profitable. You may not be profitable in this individual trade, but you have certainty that over a large sample space, you're going to be more profitable than not. You're going to make money. And then you also need to have certainty that the way you exit out of the market with your management style works as well. And again, you have data to support and prove that works based on historical data and evidence that you can actually show your mind. And that way you can come to the market with certainty that this is the way you enter, this is the way you exit, and also with realistic expectations that you may not be profitable in this individual trade, but you don't need to be. Because you know if you're sticking to your process over the large sample space, you are certain that you're going to end up profitable. So then I show them a thought exercise I'm going to show you right now. And then I also teach them a tool and show them a practical thing they can do, which I'm going to show you at the end of this video, to ensure that they build certainty. And when they have certainty, they no longer need confidence. Because the only reason you're desiring confidence in the first place is because deep down you don't have certainty that your trading strategy works. So you're looking for confidence as a form of comfort as opposed to using data to have certainty that your trading strategy actually works. So I show them this. I say, if you now have certainty with the data that you have 100 trades, I only have 10 here, but let's imagine you had 100 trades, and you can visually see that even though you take losses and sometimes strings of losses, at the end of those 100 trades, at the end of that sample space, you're going to end up profitable because you know that you're going to win more than you lose because your strike rate is, for example, in this scenario, 60%, and each win you take is going to be larger than each loss you take because your reward to risk is 2 to 1. So once they have the data to support with evidence and they've seen it and it's true and they're not making anything up, they now have certainty that they'll end up profitable over the larger sample space. And I show them that there's no need to have confidence that each individual trade is going to be profitable because they won't be profitable. At times you're going to take losses, at times you're going to take a string of losses, but you can have certainty that if you consistently stick to your process over the large period and over the long period and the larger sample space, you're going to be profitable. And I help traders transition from confidence, false confidence, to true certainty. And you can only have true certainty if you're embracing both sides of the market, the winning and the losing. You see, traders try and trick themselves into being confident, and what this is actually doing is setting unrealistic expectations that every individual trade is going to be a win. And then when they take an inevitable loss, it kills their confidence. But if you embrace both winning and losing, then you realize that you're going to win and lose, but you're going to win greater than you lose, and you're going to win more than you lose. And in terms of the larger sample space, if you stick to your process, you have certainty that you're going to be profitable at the end of that sample space. That's something that traders can truly resonate with, as opposed to this false idea of confidence that every trader intuitively knows isn't true. So I get them to visualize their edge and show them that even after these 2 losses or even more losses, and you may be sitting -2, -3, -4 for the month, you can still have certainty that over the larger sample space, you're going to be profitable. And the trick that I teach them is to broaden their perspective. Instead of just thinking about the outcome of one individual trade, start putting everything in context of the larger sample space. There's no point getting depressed or losing confidence after one loss, because this one loss is just compensating for future wins to average it down to your monthly average. And there's no need to get overconfident about wins, because these wins are just compensating for past losses or future losses to give you your average monthly return. So the trick I teach traders is to broaden their perspective. Instead of thinking about the outcome of one individual trade, think about the outcome of 10 trades, a large larger sample space or even 100 trades. And the broader your perspective can be, then the less emotional you're going to be after each individual trade. Both elated and depressed. You're going to be less elated, less depressed. You're going to be more process-based, and you're going to be just sticking to your trading plan as opposed to getting caught in fear and greed and overconfidence and lack of confidence. These are all polarities that are part of outcome-based thinking because of an addiction to an individual win. But when you break out of that trap and you start thinking about the broader sample space, then you just have certainty that things are going to work out over time. You don't need false confidence or false hope or false faith. All you have is true certainty that your process over a large sample space will play out. Now, this is all assuming you have an edge in the first place. You don't want to be trying to curve fit to try and justify to yourself that your edge worked. You want to be testing. If your edge doesn't work, you want to find something else. But if it does, then you want to trade it with certainty in the data. So broaden your perspective.